All right, guys, welcome back to another episode of the Black Bullion Show. When will these crazy premiums go down? It seems like since the start of the Ronies, gold and silver premiums have almost reached a point of no return. In normal times, during an economic contraction, you will have natural stressors on the gold and silver supply chain, due to higher levels of demand coming from investors. This time, that dynamic is there, but those natural supply side stressors have now invited unnatural supply side stressors, such as reduced productivity from mints and mines alike. They've invited them to the party. So when will all of these crazy premiums go down? Well, find out shortly. But first, if you're new to this channel, please hit that big red subscribe button right down below. Also, please hit the like button. Helps to get this economic evangelism right on out there to the masses to bring more people into precious metals. Okay, so I found a pretty interesting article from CoinWeek entitled US Mint Making Changes to Meet Exploding Demand for American Gold, Silver Eagles. This article provides some great information regarding mint production in the United States. So let's get started here, and I'll read here. On July 23rd, the Mint held its regularly scheduled monthly meeting with the APs, and that is approved purchasers. And they did it via a telephone conference call. During the call, which is not open to the public or the press, Mint officials said they are considering producing Silver Eagles at the San Francisco and Philadelphia mints to supplement production at the West Point Mint, where bullion coins are normally produced to meet rising demand. From April 8th to 20th, Silver Eagles were made at the Philadelphia Mint because the West Point Mint had been closed due to implement safety measures to protect employees from the Ronies. To address the increase in demand, the Mint is trying to double its output of Silver Eagles from 400,000 every 2 weeks to 400,000 per week. Some additional details about the meeting with the APs were obtained by Bloomberg, which the Mint has not confirmed. According to the Bloomberg story, measures taken at the West Point Mint to try to prevent the Ronies from infecting its employees mean that production there will be slower for probably the next 12 to 18 months. The Ronies created a whole new set of challenges for us to manage, the Mint said in a document that Bloomberg had obtained. We believe that this environment is going to continue to lead to some degree of reduced capacity as West Point struggles to balance employee safety against market demand. The document allegedly also says the West Point facility can only produce either silver or gold coins at one time, not both, since the Mint will need to decide when to choose one or the other and to cope with rising demand. The Mint officials have asked the APs to provide 10 and 90-day demand projections for bullion coins. Some people have misunderstood this information to mean there's a shortage of silver planchets like the one that occurred in 2009, which there is not. Sunshine Minting, which makes planchets for the Mint, has confirmed that. Others have suggested that it means there's a bullion coin shortage, which is partly accurate, or that this is some sort of ploy to keep prices higher, which is not. Instead, there is an inadequate amount of coins being made to meet the unprecedented level of demand. The US Mint has taken and will take additional steps, including the recent return of the San Francisco Mint to full capacity and the possible expansion of bullion production to that mint and to Philadelphia. Now this is the important part. What this means for the market is that premiums should remain elevated as long as there is a gap between how many silver and gold eagles the Mint can make and the demand for these coins, and as long as more people are buying rather than selling bullion. So according to CoinWeek, mint production, and the lack of reselling will cause premiums to remain elevated. So as far as a supply crunch is concerned, well, check out this graph showing silver price premiums since the financial crisis. So I got this from JM Bullion, and this graph goes from 2009 to 2017. It tracks the price of silver along with the general premium. What's interesting is that you find the premium spiked heavily in 2009, and one of the reasons for that is because of the shortage from the prior year in 2008. However, as prices exploded into 2011, the premiums actually dropped significantly. According to this chart, from 2010 to 2013, premiums were between 0 to 5%. So for some of you guys actually who were stacking silver during that time, can you guys confirm this? If this was your experience between 2010 and 2014, were premiums this low for you guys? Let me know in the comments section. I just want to learn from you and your experience. But continuing on with the chart, as prices began to drop to the $20 to $30 range, premiums got up to about 20%, almost 30% as well. The past 3 years saw an average premium of around 10%. So, well, you might be asking, well, where are we now? Well, a bit of that kind of depends on, where you're getting your bullion and what type it is, what year, etc. You'll find various premiums. I found some as low as 20% to as high as 33% for 2020 silver coins, not rounds. Now, let's return to the original question. When will premiums go down? The Ronies are the last element that we have that we haven't mentioned quite yet. So not only has it impacted mint production, but it has also halted silver mining and base metal operations. Now remember that the majority of mined silver comes as a byproduct of base metal mines. So guys, here's my answer. We may see a slight drop in premiums next year after we get the Roni shot. That will impact production on both the mining and the mint side. So I expect to see that drop in late 2021 or early 2022. Now remember, they said it usually takes around 18 months to develop those kinds of shots, so to speak. Now, that doesn't solve the additional squeeze provided by general supply not keeping up with investor demand. I expect demand to remain high for some time, at the very least another year or so. But what do you guys think about premium prospects for the foreseeable future? Let me know in the comments section below. Thanks again for checking this video out. Let's see if we can figure this thing out together. Please give the video a like. Please subscribe if you're new to this channel. Thanks again. It's Black Bullion.